What's up, guys? This is Diego, and I'm a professional trader. And today we're going to talk about the possible opportunities that this week can offer. We're going to talk about the best levels and how to trade them and how to maximize and get the best out of them. First of all, let's take a look at the weekly chart. As we can see, the previous week doesn't look very bullish at the moment. It's a red candle, and basically after we took these two weekly highs right there, we started dropping pretty hard. See here, we took them, we stopped out all the people that placed their stop losses above it, and then we dropped around 6%, getting pretty close to this weekly low. And then we closed the candle red. At this point, my thought process is, I think we're gonna take the bottom of the range. Currently we are in this sideways price action, and after we took the top of the range, I expect Bitcoin to take the bottom and go from there. So after we took the bottom, in my opinion, we have two scenarios. It can either be a fake out like this, continue the range and possibly going higher, or a more bearish scenario where we took the low, got a follow through, a breakdown, and then it would be much more bearish. And I think both scenarios are valid. Of course, I can't really predict which one is going to happen because we haven't taken the low yet. But I really think that this is going to be taken. That being said, because my bias is bearish in the short term, I'm just going to look for a short until we take the low. And now the question is, if my bias is bearish to take this low, what are the best places to short from? Let's go on a lower time frame. Let's go on the daily. So on the daily, we can clearly see the sideways price action that has been going on for about 16, 17 days. It's a pretty long time. And the longer it goes on, and the more the chances are that we're going to break out of it, either on the downside or on the upside. So I think this range is going to offer pretty big opportunity, either for a big move up or for a big move down, because we have spent a lot of time here. So we have accumulated so much fuel for whatever move we're going to get. Now, looking at the daily chart, the first thing that catches my attention, and because we're talking about places to short from, the first place is this one, because we have two daily highs close to each other, and the second one didn't reach the first one, so it's like a double top. So up here we have a lot of stop losses from people that trade this candle and from people that trade this candle. So first of all, this is the first place that I can see for a short above this high. So we can possibly do this, stop people out, reverse, and go down to take the bottom of the range. That's the first place that comes to mind. And also, I think in general, above those highs, this is the area where I'm going to look for a short. I think it's a zone. We can either easily take these highs and drop immediately, or we can even go a little bit further and then drop from up here. Very possible. And the second place, which is in my opinion less likely, is the current high, the previous week high. I think it's less likely because, first of all, we are much closer to the lows, to the previous week low and to the other weekly low. We are very close to them, and usually Bitcoin follows the path of least resistance. Because we are closer to these two, I think eventually we are going to take them before this one. So this place up here is, in my opinion, less likely. Of course, I want to be ready if we get there, because that's also a place with a lot of stop losses. So if we get there like this, I'm going to look for a short because this could be super possible. I'm not going to look for longs until we take either the previous week low or both weekly lows. The previous week low could offer a bounce for sure, at the right time, New York session, because that's when the best lows and highs are formed. You could easily do this and go for more upside. Or we could even take both, like I said, and go for more upside, or we can just break down. Those are the most likely scenarios. I really think we're gonna take at least the previous week low and possibly both of them. Let's go on an even lower time frame to see if we can get more information. Let's use the 1 hour. On the 1 hour, we can see that below the bottom of the range, we have this clear order block that can act as support. We have some price action here, so we can take all those two lows and then bounce on the order block and reverse, super possible. I think, in my opinion, if after taking this low, if the order block doesn't hold, I think it's gonna be pretty bearish, because as you can see here, there's not much support, it's a straight line basically. And when we get stuff like that, we're gonna feel it very quickly. And if we feel it very quickly, a big drop is gonna follow. And the context is gonna be way more bearish. So let's recap. Where are the best places to trade for the following week? Well, like I said, if we don't take one of these two lows, I'm not gonna look for longs. But let's say the best long places are 1 and 2. And the best short places are above these two highs right here, 1 and 2, which are daily highs, like I said earlier. Above this, it doesn't have to be precisely above it. It can even be a zone like this. And the previous week high. These 4 levels are the most important places to trade from for the coming week, for the current week. And how do we trade them? Well, every time I take a trade, I always enter after a market structure break. So I go on a lower time frame. I usually use the 5-minute or the 50-minute, and then I enter as soon as we change market structure. Let's take a look at an example. Let's say we're looking for a short up here. Let's say that, for example, we rise, we grind up here, we took all the stop losses, and then we go back below the high, then we retrace a little bit, then we change market structure. That's what I mean by a market structure change. High, low, lower high, lower low. This is where you enter. Stop loss here at the high, because you want to use market structure as an entry and a stop loss, because the market structure is the thing that matters the most in trading. It's not really about indicators, CVD, RSI, volume. No, not really. Sure, those things matter, but way less than market structure. Personally, my chart is always naked like this. Of course, I have, as you can see, a lot of folders here with levels, point of controls, but the naked chart is always the best, because it gives you already the market structure. So that's how I usually trade. I wait for a market structure change. In this particular situation, I want to see a bearish market structure, and then I enter. Same thing on the bottom. If I want to enter for a long, down here, for example, I have to see a drop like this, and then maybe a back test of this level, a higher low, and then I can enter. Stop loss here. I always need to see a market structure change, if it's possible on the 50 minutes, or I can even go lower on the 5 minutes. I never go lower than 5, because then it gets too messy and it's kind of pointless. So the 5, 15, and 1 hour are my favorite ones. They were great. Now let's take a look at an example. So for example here, there was a trade I was waiting for here. We also had a range, and I remember that I was waiting for a trade above these lows, this one and this one. And as soon as we wick through them, we went back up above it, which is already a sign of strength, and then we formed a higher low, and then we changed market structure. Let's zoom in. See? It's very clear. We throw higher low, market structure change, that's where you enter. Market structure change, stop loss, you enter, and you aim for the top. Of course, the context is very important. It's very important to understand where the algorithm wants to go based on where there are the most stop losses. This particular situation, this trade worked perfectly. And we have so many examples like this because that's how the algorithm works very often. It changes market structure clearly before reversing. Even up here, look. I was waiting for a short up there. Let's zoom in again. Above this high right here, I was waiting for this high to be taken. And we did. We took the high, low, lower high, market structure change. You can enter here, stop loss here, and you get a nice move down here. I mean, that's a decent move, right? Not the biggest ones, but it's like 2.5%. Even here, we take 1, 2, we withdraw low, which is already a sign of weakness, because instead of continuing up, we failed auction, we drop, lower high, market structure change, drop, and take all the lows. That's what Bitcoin does over and over. And then there are certain trades where you need to be more experienced and more aggressive to take them, like here, below this low. We withdrew, and then very quickly, we rise back up, back above it, and the rest is history. In this particular situation, I traded more aggressively. It takes more experience, but one could say, you know what? I trade only if I get a clear market structure change, because I want to be sure. I want to have more opportunities. And that's a very reasonable approach. So that's how I'm going to trade these three areas, like I said. Short in area, long in area, long in area, short in area. Always waiting for a market structure change and go from there. Thank you so much for watching. If you like the video, please leave a like, leave a comment, and subscribe. Thank you, and I will see you next time.